Well, there has been a change in prices of Bitcoin and cryptocurrency as they both suddenly skyrocketed a few days ago, making awesome price gains beyond $34,000 and $37,000 to beat $40,000 on Bitcoin. Surprisingly for us, it has been the best price since the middle of the fifth month, where Bitcoin's price attempted to hit $43,000 the night before. Compared to what Bitcoin was worth last week, it's almost a difference of $10,000. Before we get into the video, don't forget to leave a like and subscribe to the channel with notifications turned on so you don't miss any of the new videos that we post. Alright, let's go. Ethereum wasn't left behind after the whole crypto rising during that period, shocking Ethereum traders and many more, prompting them to stare at their chart for another Ether breakthrough. Now we have close to 1.7 trillion being observed these last few days in the entire crypto market. After unexpected billing from the bipartisan basic physical and organizational structures, facilities of billions in dollars are being passed by the US legislature, which includes a clause to raise $28 billion from crypto investors. Many traders from cryptocurrencies are becoming increasingly nervous, and some have warned that it could kill the industry. This is a very wrong clause, and if adopted, will do more harm than good to American interests, wrote Jack Travinsky, a lawyer who specializes in encryption, in a lengthy Twitter post explaining the bill. How will it affect the emerging crypto industry and market? The bill passed a preliminary vote in the Senate this week, proposing to tax the earnings of Bitcoin and cryptocurrencies to fund investment in U.S. basic physical and organizational structures and facilities, and broaden the extent to which brokers can do some things, to the point that cryptocurrency buyers and sellers and platforms maker where crypto can be saved and run should apply additional security, requesting other data like the Know Your Customer KYC kind of thing. Users do more than expected these days. After the $550 billion bipartisan infrastructure bill got to the notice of CoinDesk, any broker transferring digital assets must submit a declaration form following the revised information reporting system. The document said this clause added valuable security where brokers get to know where they stand or know their limit, and aids a better result on the different approach towards acquiring a virtual or electronic property as well as trading it. The transfer of securities is not without electronic property. An early American historian, Lindsay MC, observed how swiftly things are going, and they are undoubtedly something we should be afraid of, but she added that people shouldn't panic, that the problem can be diverted since the clause has not been yet finalized. The historian disagrees on working along a certain principle where utilizing things could cause more harm than good to the industry, and logically should be avoided, which may mean that the United States can prohibit the mining of crypto assets. But due to China's decision on putting an end to the mining of cryptocurrencies and Bitcoin a few months ago, many started moving to the US with their powerful computers, since it's no longer allowed and appreciated in China, and their blockchain needs to be secured and trade other recent tokens and cryptocurrency. The US has become the one place to accommodate these people where their work can be attended to. Also, the US legislatures are not comfortable with the outcome that can suffice from a quick change of climate, while mining Bitcoin and cryptocurrency are not satisfied with the growth they're seeing regarding the US industry. Professional analysts and traders on digital currencies caution that the language used in the bill may broaden the knowledge of brokers on what to do and what not to do, exposing them to how far they can accomplish which brokers provide hardware and software. It was unfortunate that in the draft we see that the categories of people who are required to report are very broad and can encompass people who only provide software or hardware to customers who do not know anything about user proceedings. The person heading the headquarters in Washington, D.C., Jerry Brito, on crypto think tank Coin Center, mentioned in his Twitter, adding that they made few attempts to fix the bill's crypto provisions. It can also cover the miner index. The advantage is that you can say that the miner index does have clients defined by the tax law in this regard. Rising Ether Bitcoin price ratio shows crypto risk appetite. Clearly, after the current increase in Ethereum and Bitcoin pair price ratio, those who invest professionally in cryptocurrency gave a warning, making everyone observe the continual motion the trend is taking. The pair has exposed an uptrend breakout, which is obviously an indication of market-wide risk where other competing digital currencies against BTC can be surpassed. Comparing both Bitcoin and stablecoin, smart currency investors have been able to understand which is the market value most adored and one which they can safely hold, avoiding unnecessary rising and falling, with less risk like yen from Japan, Swiss from France, or treasuries from US notwithstanding. The most adored type of digital asset remains the Bitcoin, followed by Tether, a stablecoin. Clearly, compared to other growth-sensitive assets regarded as risky, Ether and other digital assets like Coin are as well recognized as risky too. However, don't be too excited when the cryptocurrency pair of Ethereum against Bitcoin, ETH/BTC, spikes a bull, because it has been revolving around that style for a long time now. And the same thing occurred last few weeks. They promote appetite in the market. For instance, Bitcoin rose 12% the week before, then unfortunately lags behind close to every crypto subsectors, adding tokens that are not fungible and Web 3.0 tokens. Following the same period, Ether Bitcoin accelerated by more than than 3%. An action of the same happening was observed between the middle period of April to the middle period of May. ETH/BTC moved to 0.073 2-month high, signaling a triangle composed upside down escaped on the ID chart on Thursday. The composed trend escaped the resistance after so much consolidation, and the larger bull that took the hill from March lows close to 0.03 continues. After a total consolidation for about 8 weeks, the Ether received strength enough to have the Ether Bitcoin breakout mentioned by a technician in the charted market and Dominic Dantes, a reporter at CoinDesk. It's a bullish continuation pattern. Next resistance is seen within 0.8. We can assume that in the next few months, the Ethereum and other digital currency litecoins will keep outperforming against Bitcoin. So obviously, according to the analysts, the crypto market is advancing, warranting crypto investors to find alternative strategies and checking out industry subsectors directly. Martins Gasper, an analyst skilled in research work at Crosstower, informed CoinDesk the idea of Ethereum becoming a deflationary digital currency in 3 years and beyond is factual, judging all provided analysis, as well as the influence around Ethereum's estimated worth, can make it profound after the hard fork stays where it's supposed to be. Ethereum will now burn part of the fees paid to miners, resulting in a net decrease in issuance. For example, since the update took effect on Thursday, the blockchain has burned or destroyed more than 5,000 ETH, offsetting approximately 40 of 100 of more than 12,000 tokens mined during this period. Ethereum has a possibility of becoming the most favored digital asset displayed all around with little or no hindrance beyond the 3,000 phase, said Edward Moya, a senior market analyst for the Americas of the brokerage firm Oyanda, in an electronic presentation message. Bitcoin boomerang back to $40,000. Battle between the 45,000 and the 50,000 resistance. With so much persisting power for about 12 weeks to escape the resistance, Bitcoin kept consolidating around 40,000 price level. Although this week's brief rush reduced its motion, the disadvantage regarding that remains at lurking close to the 34,000 to 36,000 breakout point at support level. The breakout line at the top is at a 200-day moving average near 45,000. A smooth breakthrough will take the formal bullish aim to 50,000 and 55,000. At press time, Bitcoin's transaction price is roughly $40,600 with a difference of 6% in the last 24 hours. The relative strength index RSI has fallen from overbought levels, which may avoid anything that can discourage your desire to take profit near resistance levels. Bitcoin's medium-term trend is improving after staying above the 30,000 support level for the past 3 months. A thought-through breakthrough of the 200-day moving average will eliminate the downward trend for the past 4 months. However, rigid overall resistance may stunt the increase of price before the following week. Don't forget to hit the like button and leave a comment. Thanks for watching, take care, and make informed trades.